Good afternoon, everyone. This is Chris Brecher with the Chart Patterns Mastery Room. Just want to go over some things for you. So, number one, I think a lot of you know that I play bearish patterns, and it seems I hardly anybody plays bearish patterns. So, I did a couple of classes on it, but I just want to show you what we're talking about. Number one, that is a bear flag or a Brecher ledge. So that is a consolidation pattern with a flat bottom, and that's after a sell-off. So you have this on an hourly chart. There it is on an hourly chart. So I could show you all those, but I wanted to show you something else because I want you to be able to avoid disaster, and that's the Stewie pattern. So what do I mean by a Stewie pattern? Well, the first thing is I see a number of people trying to buy on the way down. So whether it's Bitcoin stocks, whether it's Lilly, whether it's NVIDIA. I'll give you a perfect example. You just can't buy this on the way down. I don't care how good it looks on a long-term chart. I want to show you the difference. So there is a stock that went straight down. I mean, straight down. There's no place to buy it, no place to hide, no reason to buy it. So that's number one. Number two in here, I want to show you when to buy things. So this is a Stewie pattern. Stewie pattern is an inverse head and shoulders. Stewie, inverse head and shoulders. Yeah, you got to look at that and probably say, you have martinis for lunch or something. But I'll show you what we're talking about. So this is an inverse head and shoulders. So you have this cascading sell-off like you have with NVIDIA, like you have with MARA, like you have with the NASDAQ right now. Well, the YM. The key is the first rally and then the consolidation. The first rally usually results in an overbought condition, whether you use a MACD, whether you use a RSI, whether you use a stochastic. You're looking for that kind of pattern. The key is not to buy on the way down. The key is to buy after it consolidates. You want the direction right. That's all you care about is the direction. So now, real time, I want to show you this. Now, keep in mind a couple of other things. We're really into correlations. So I'll show you what we're talking about. Now, this has been posted multiple times in the Chart Patterns Mastery the last few days. I just want you to realize that this isn't like a hindsight thingy. This, I just can't stress it enough that we've showed this over and over and over. There you go. This has been stressed over and over. What is this? Similar charts have similar outcomes. I am really into that. Keep in mind, I do not fall in love with a stock. I fall in love with a pattern. So when the NASDAQ broke here and went to July 2nd levels, right in here. Now it undercut, don't get me wrong, but that made the probability that the S&P would do the same thing. It also had a top. So just keep that in mind in this area. So I look at consolidations. I look at inverse head and shoulders. And I also look at correlations. Just keep in mind that a bear flag is more likely to work if a correlated index is already breaking down. So it's all about probabilities. So now you're getting to the probabilities. There's another thing in here that it just seems like a dirty little secret a lot of people don't talk about. And that's this. Let me get to it. Well, it's the polls. So here you go. So, and I'm not saying pro-Trump, pro-Biden. I don't care about that. I care about the polls. And I care about if the polls change. That's all I care about. How the polls have changed. You see, it's all Trump. So you see, it's all Trump. So the key is the New York Times poll. It's not the New York Times, so don't bash the New York Times. They have 1,900 polls they monitor. The key is if you went back in here and went to them all, what you would see is if you go back to, let's say, June 30th, There. You're going to see Biden up 10, Biden up 2, all this stuff June 22nd. I hope you can see that up there. You don't have to agree. I'm talking about how the market perceives it. You see it's a sort of a push. Now, if you go back and you go to July 1st, let's see if I can find it. Well, what happened was the polls started widening. And the second they started widening, here you go. So right here, July 1st, they started widening right in here. So the whole idea is the minute they widen, because theoretically markets like Trump, this is all theoretical. But when that widened, the stock market went up. So I went straight up January 2nd. The key, though, is now there are all these rumors about Biden stepping down. And guess what? Yep, the markets are back to when the polls widened. That's all this is. So, number one, you have the NASDAQ go down. So you had a theory. This already went down. So it's a heck of a lot easier to play the S&P to the downside when a correlated index has already gone down. You don't have to care about the polls, but I'm just showing you what it looks like the markets are perceiving. That's what they're perceiving. I'm just telling you that. Now, where else do you go with this? Well, the first thing I think you'd want to see here, and let me be sure I'm doing this right. The first thing you're going to want to see here is you have this correlation. So you have these two on daily charts look extremely similar. You have the tops and right in here. Then you have the sell-off. You have the rally like that. Yeah, you could say that's 5 waves, I guess, in hindsight. But David Starr is 10 times better at figuring out these waves than me. Just keep that in mind. But let's say a 1, 2, 3, 4, 5. So then you look over here, 1, 2, 3, 4, 5. But this one is already at that little thing right here. It's already there. So that's like this going to here, which is where it is. Now, why am I showing you this again? Well, there are a couple of things. Number one, I use a 20 SMA and a 50 SMA and a 200 SMA. I don't care which SMA, if they all work, or an EMA or a whole moving average, anyone that works for you. All I'm doing when I use moving averages or the ATR trailing stop is trying to get the direction correct and be on the correct side of the market. Right here. For some odd reason, everybody wants to short. Look at that. All the way above the ATR trailing stop. So now, why on a daily am I only showing you the 20? I could show the 50. Definitely could show the 50. All in uptrends. The key for me, though, and when on a daily I use the 20, is if I see a major index violate a moving average. So when you saw this and you saw the NASDAQ violate the 20, then it was more probable that the S&P was going to break it. It also meant that the S&P bear flags were more likely to work. That's what happened. Now, fast forward to another thing. If the NASDAQ is getting hit like that, and the S&P is getting hit like that, are there other indexes that are extended that are over the 20? Well, indeed there is, and that would be the YM. So another correlated index. Now, it's a little scary. This does not have the same structure as this on the left, on the right. But it has lately. So from here, May 30th, very similar right here. So when this got nailed enough, you got to think you look for bearish patterns in the Dow. So like I said, it's probability. So if this is down enough on the right, then on the left, if you see bear flags like they're more likely to work. That's all this is about, probability. So the probability of this staying at an all-time high in the upper left goes down dramatically if this is at July 2nd levels. Massive divergence there. That's why we were messing around with Dow stocks. So in fact, this is an interesting set of charts. So here is 32 Dow stocks. Now, it's really only 30. I just didn't have enough room for everything. I mean, these two overshot. So you could go put JP Morgan and leave Netflix. But these are all your Dow stocks. So 30 of them. The key is, if you want to know how to add it, just go to a 32 grid. You know, just go to Thinkorswim and put in 30 or 32 because it goes to round numbers. And then what you do is you load symbols to cells. And then all I do is I go to public and I put in Dow Jones and they all fill in. And that's how I got all the Dow stocks. Now, the key in here, and some of them is you'll see that just you see how bad they're acting. And they acted bad yesterday and they're acting bad today. So very interesting. So the lower the NASDAQ goes, the more likely these stay down. So I just want to show you that. That doesn't mean I'm trading it right now, this second. But I wanted to show you that. So here's your, look at this. That's July 2nd, right here. That's your July 2nd. Now, the thing about this is, where's the actual support? Now, we showed this before the opening. So give me 1 second. So we were showing this before the opening and after the opening. You had this rectangle. So this rectangle was more likely to break. The NASDAQ was already going down. This bear flag was more likely to break if the NASDAQ going down. And then for the opening, we were showing this rectangle. And we were saying up here. And we were saying that at the top of this, you would look for reversal patterns. So just keep that in mind. So at the top of this, there's your reversal pattern. There's your bear flag. So the whole key is that now we have to watch this. You see the rectangle. Yeah, consolidation pattern. Consolidation pattern. Big consolidation pattern. That measures 80 points. 80 points gets you right here. Gets you right there. So I'm just going on some metrics. Now, number 2, July 2nd levels. So I don't know how many of you have been on our site on the Chart Patterns Mastery and have seen us harp about the July 2nd levels. So not only are you doing this, where that's your July 2nd right here, but you also have this. You have a top and you have a consolidation. So just coincidentally, this measures about 80 points right in there. That gets you there. Now, I didn't draw that perfect. It's actually a little higher. There. It's about 89 points right in there. If you go really top to here. So 89 points, where's that get you? Right where it is. Right to July 2nd levels. That's why we were playing that way. So just keep that in mind in there, that consolidation patterns matter. And also consolidation patterns and tops are more likely to reach their downside objective if correlated indexes like the NASDAQ are already overshooting. That's July 2nd. It's overshot, so the ES is more likely to overshoot. So that's where we are right now. Keep in mind this ES now. I'm going to take off all of the, well, I'll show you with Thinkorswim. So you got that. So at the minimum, I think it goes down that amount. That's 25 points. That gets you down to there. Right there. So just taking that rectangle. Now, and like I said, the reason I started with the Stewie pattern, I don't want you to always think I'm bearish. But the point is that it seems like hardly anybody plays the downside. As you see, there's a time and a place to play the downside. So, Jay Haas, thanks for saying that. Yeah, I've been obsessing and, and if you're wondering about those July 2nd levels, if you think that that's a hindsight thing, let me show you something. This is StockTwits. Yeah, I have a lot of followers. So I have 53,000 followers. There's your Stewie pattern and CrowdStrike. That's pre-opening. How long have I had this chart up, Mr. Haas? I mean, I've had that up for days. So, and that's where we are. And, VIX, there's a bull flag for you. That is from days ago. So it's only 80 points lower. So, yeah, I just want you to know, tune in on our site or in StockTwits, and you'll find that kind of analysis. So just keep that in mind. So, Jay Haas, I know you've seen that, and thanks for mentioning it. So thanks for mentioning that. So that's number one. Number two in here, making that grid, that's Mirza, am I allowed to share that grid? So about the Dow, I don't know if I can in the essentials room. I don't know how that works, but let me just show you again, Laurie. So all I did in here was I did this. I went into here and I went up to here. I don't know. I got to add it up. Let's see. 3, 4, 5, 6, 7. Yeah, there's 35. I added wrong. 35. And then, right here, those are daily charts. So you gotta go to this. So if you're just starting trying to do these, you gotta maximize. Yeah, I didn't say that very well. You go to 1 minute. Then what you do is you set that as a default. Then you go back to this grid. So let me just show you. You restore the symbols. I'll take this one off. Well, you could reset this to chart default. It'll go to a 1 minute. But the method to my madness is now that you set this, let me go back to the steps. So all I did was take the first chart. I right-clicked and went to Style, Set Chart Default. That's all. Now, what happens is, theoretically, I hope this works while I'm on live, when you go to Load Symbols to Cells, that's up here, and you go to Dow, theoretically, they should all be 1 minute. Yes, I think. Let's see if it worked. Yeah. So you're setting the style on the first chart, and then they all go to that. So now you have all the Dow stocks. Now, this is the next thing. The Dow, to me, there's a certain level where then I'll look for Stewie patterns. So let me show you. So I love doing this live, even though I'm sort of sticking my neck out. But here you go. So we're going back to this. We're going to go to Trading View. So we know that the ES has hit support. We know that the NASDAQ has already overshot. So I'd rather play the NASDAQ to the long side. And I'll show you another way to do it. So the problem is you don't have that reversal pattern yet on a 4 hour. How about a 2 minute? We're getting there. I'm not sure you'd call that a Stewie pattern yet. Now you'd like to see it do this. Sort of, so I can draw that. But now we got another thing to look at, and this goes with the Dow. So the Dow has been a big breakout. We know that. So this area, and it's a zone. Don't get me wrong. It doesn't mean it's an exact price, but it's a zone. So if the Dow is getting near a zone, now what I'm going to do is I'm going to look for Dow stocks that are already forming Stewie patterns or inverse head and shoulders. So I'm just going to give you a quiz in here. So which ones in here look like an inverse head and shoulders? Let's see if any of them. So now the problem with the inverse head and shoulders, and I'll go back to use Snagit, is you want an inverse head and shoulders that doesn't have any resistance overhead. Like that. So if they fall fast, then you want to look for the inverse head and shoulders because they don't have a lot of resistance. What do you notice about CrowdStrike? Darn right. It stopped right at resistance. So now let's go back to here. Now I have up a lot of charts. It's probably going to blow up Thinkorswim / Schwab. But what in here looks like an inverse head and shoulders? It doesn't mean I'm playing it right now. But what in here? Does Walmart look like an inverse head and shoulders down here? No. Now, keep in mind, a lot of these, heck, you're going to miss a lot. We're caring about direction. That's all we're caring about right now. CVX, that could be an inverse head and shoulders. But what's the problem? It's against resistance. Believe it or not, the ones that are acting the worst are going to be the ones where the inverse head and shoulders work the best. So let's just find one that looks like it's developing. Remember, we're talking about the down near support. So you're looking for what's already forming a inverse head and shoulders. Procter & Gamble, no. Goldman Sachs, maybe. All I'm doing is looking for this pattern. I'm looking for the Stewie. I'm looking for that pattern right there. So just list. I don't care if it's a 1 minute, a 15 minute, an hourly. That's what you're looking for. And because we're looking at 1 minute, I just want to see if anybody is identifying this possible Stewie pattern. So, yeah, yeah, that's pretty funny. You're dead right. You're dead right about Dow. So when I look at all these, which one is trying to develop a pattern? Now, it's not perfect because it's got that resistance overhead. But yeah, definitely when you're looking at all these, which one looks like a possible inverse head and shoulders? And that would be this. Darn right. Right here. Now, what's the problem with Dow? There's a couple of problems. Number one, yeah, that could be an inverse this way or, yeah. The big problem is exactly what you just posted. Number one is the resistance overhead. But number two is it just doesn't move a lot. But that's, you're dead right. I mean, thanks for posting that. This is in the YouTube room. The rest of them, you just don't see them. What's that mean to me? Yeah, the Dow might not be done going down. In fact, down here, just go put the YM futures. There. So now, don't laugh. Is the YM itself an inverse head and shoulders? Maybe. But I'm telling you, the one that's reached its downside objective is the NASDAQ. There it is. There it is, Jay Haas. I don't know your first name, so sorry I'm saying Jay Haas. But there's your Stewie right there. So, in fact, let's go put this on Thinkorswim. Maybe it'll show it a little clearer. There. There's your Stewie pattern. Right there. Right there. And keep in mind, this is what a lot of people get wrong. Sure, you could buy on the way down. If that makes you happy, you can buy on the way down. This is sort of pushing it on a Stewie, but here you go. Justin. So, there. So there's your Stewie. That's pushing it on a Stewie. Maybe it's that. There. But the key is that you're not buying on the way down. You're buying as it starts to turn. I always talk about things turning. But like you see, and what you're identifying is this, that if you're playing this, a Stewie pattern has a measuring objective because that's an inverse head and shoulders. So your first measuring is from there, 19,704, to the neckline, which is 19,730. Let's say 30 points. So 30 points gets you to 19,760. That gets you to right here. That's your first stop. Now, like I said, I am not bearish on the NASDAQ whatsoever. So, but there's your inverse. So what else does this 1 minute have in not have in common, but what else is helping it? Well, number one is that breaking the ATR trailing stop. Number two is probably on a 15-minute, it's really oversold. And number three is on a 4-hour chart, it's at multiple layers of support right here, right there. So I'm taking that prior top and the prior bottom. In fact, just so you have this in your hip pocket, I'm going to show you this and I'm going to copy and paste it for you. And keep in mind, when I talk about support, it's a zone. What that means to me is it doesn't mean to buy at the bottom. It doesn't mean to buy at the edge of the gap. What it means is that's where you're looking for the reversal pattern. That's all you're doing. Just like with the ES on the downside. There. Even though that's a little sloppy. There. So let me copy and paste that for you. So let me share that. I can't share it in the YouTube room. I can't share images. I wish I could. I can try. Every time I do, it doesn't work. So, and I can't upload anything either, but I'll try. Nah, it didn't work. I don't know how. Let's see. No, it won't let me. So, Essentials room. Here you go. And like I said, one of the ways I just can't stress enough is oversold doesn't mean anything to me other than oversold in an uptrend or overbought in a downtrend. But I will look at this. And I'll look that it's getting oversold, but that's why here, when it got oversold at support, I back away. Oversold at support. Oversold at support. So then I'd rather play an overbought under things. That's when it matters to me. Now, we just saw the support zone and we saw the inverse head and shoulders. So it worked. It overshot. Great. So just want to show you that. I mean, that's what I'm watching in here. So definitely it got oversold. So in your reference, if I'm going to play, let's say an hourly oversold. So it's probably hourly. See, it didn't work. Now, I mean, you just didn't see it with the MACD. It's the zone and then going short term and looking for that inverse head and shoulders. Luckily, it happened when I was on live. So pretty cool. I think pretty cool, but I think anything with the market's cool. But I hope you saw that. So now the next thing is, did the Dow reverse? Remember, the Dow went down because the NASDAQ went down. On my theory that if the NASDAQ got under the 20, the YM at the minimum would have a sell-off. There's your support zone. So when it hit the support zone, did any of those multitude of charts, did any of those inverse head and shoulders work? Well, let's see. Dow. Yeah, it worked. Now, I got to be sure these are 1 minute. So give me a second. Yeah, inverse head and shoulders, Caterpillar. Now, keep in mind another thing, because I like to combine feel. When the Dow was on the low, so when the Dow was at the absolute low, down here and near support on the bottom, on the very bottom, some of these were already bouncing. So just keep that in mind. So you see the Dow on the bottom right. You see that had a Stewie pattern. But there were already stocks rallying. So Dow was rallying. That was the one that Justin mentioned. Caterpillar was already rallying. So you're going on stocks that were already showing some of the relative strength. So no, I'm looking for the stocks that are leading to buy. I'm not looking for the laggards to buy. I'm looking for the inverse head and shoulders followed by the strongest stocks. Here you go. And Justin, you saw this, I think, a mile away in Goldman Sachs. That when the Dow was on the low, and like I said, my pointer's getting a little slow, you saw the inverse head and shoulders. In fact, when the Dow went to a new low, this was already going up. So just go on that, 1137. So when did the Dow start going up? A lot farther down. So right here, when it had the new leg down, Goldman Sachs was already on a new leg up. So if this rallied, yeah, Goldman Sachs is probably going to be one of the first to go up, which is exactly what happened. So pretty cool. Just thought I'd show you this and show you that the ones that started rallying before the Dow are the ones leading to the upside. So you got the Goldman Sachs, which means the most expensive stock in the group, Goldman Sachs, I mean, for the real active, means that probably JP Morgan went up. You know, the Citigroup went up. Let's see. Let's put them next to each other. So here you have this. You have that little thing. It's not perfect. You're up against a lot of resistance. How about Dow? Yeah, it stopped at that resistance. How about Goldman Sachs? Yep. Why did it go up? It doesn't have a lot of resistance till there. But when that went up, did JP Morgan go up? Did Goldman Sachs pull it up? Indeed, it did. How about Citigroup? Indeed, it did. So, in fact, Citigroup had a bull flag in a bigger wedge. So, I think these are really cool. So, I hope you're finding them as enjoyable as I am. So pretty cool. So just want to show you that, and that's the kind of stuff I'm watching. And like I said, I hope it helps. Definitely hope it helps. Now, another one. So MARA, like I said, the stock was getting nailed, but it was acting pretty well today. And Bitcoin was acting well. Does everybody see the inverse head and shoulders? There you go. Right there. Did it have one earlier? Yeah, it's a little sloppy, but it had a little rectangle. But now it has that inverse head and shoulders look. That was earlier. So if I played it, I would have played in here and probably played just to the resistance right here. I would have missed the next part. But I would have gotten the direction right on that quick 50 cents. So I just want to show you that. Now, let's take Apple. There's your little inverse head and shoulders, but you have a lot of resistance in this zone. In fact, this is a perfect example of a stock rallying to resistance, forming a bear flag, breaking the bear flag, rallying back to that resistance. Then I bet this is some support from farther back. Let's see. Yeah, not really. Still doesn't look good on a chart. Just keep that in mind. Just doesn't look good on a chart. It could rally, don't get me wrong, but I don't like that chart. Now, we did a put fly for next week, but I might cancel it, get out of it. I'm not going to be here because I'm worried about another measuring. That's 7 points. That will get you all the way to 220. So I'm not sure I want to be in that over the weekend. So chart patterns mastery, I might just get out. So I'm going to be gone. So just to let you know. So like I said, I can't impress enough that I don't fall in love with a stock. I fall in love with a pattern. When I watch an hourly look that bad, I don't see an inverse head and shoulders in there. So that you got to go on other time frames. Stock looks like dirt here. So I don't see it. And like I said, I watch more one of the bigger, I see about 4 big mistakes in the markets. One is buying on the way down or shorting on the way up. So number 2, not having 3 reasons to do a trade. Number 3 is just buying because something's oversold or overbought on whatever thing you use. Number 4 is not trying to trade short term when a time frame farther out looks bad. The other I see, and I see this 8 million times, is if something's at the top of its Bollinger Band and saying, oh, it's at the top, you got to short it. No, you got to wait for those trend lines on the upside or the downside. Down here, I was touched the upper Bollinger Band on a daily for like 2 weeks. So just keep that in mind. And like I said, maybe Tesla's an inverse head and shoulders, but you got a lot of resistance. But if the NASDAQ is near bottoms, yeah, you could get a pounce in that. No doubt. But right now, I would go on what's acting the best. To me, the NASDAQ, the Russell and the NASDAQ are acting the best. The Qs could be a bull flag. If that's a bull flag, what's acting the best? Well, there's your little inverse head and shoulders in Netflix. It had earnings. Plus, Netflix has no resistance. So let's take Netflix versus Tesla. It's a good question on your part about the 2-minute. So we're going to put Netflix on the left on a 2-minute, and we're going to put Tesla on the right on a 2-minute. So what do we see different? What we see different is this inverse head and shoulders. If this breaks, has no resistance till here or even higher, 650. If this breaks the inverse head and shoulders, you have all this resistance in these zones. So I'd rather play Netflix on the upside, only because it went down so fast, there's no resistance. So that's why I would play that. Now, don't get me wrong. If the NASDAQ goes up enough, sure, this could get above everything. But if it does, I'd rather play the thing that doesn't have any resistance on the way up, like Netflix. Like I said, this is what I think you're going to see today. Number one, if Biden does step down, what happens to stock markets? Well, the problem is that now the stock markets are where they were when the polls widened. I'm not sure how big an effect it's going to have. Keep in mind, this is right in that July 2nd area. Number two, a lot of chip stocks went down after some rhetoric this early in the week about Taiwan. And now you got the wild card. If Biden steps down, are the chips going to go up and the ES go down? I don't know the answer. I do know one thing, that in the last hour, I'm going to play the markets if they're up. If the ES is up, I'm going to play it to the downside, or let's say to the reversion to unchanged. Down 18, all bets are off. So that's where I am at the moment. Like I said, if I had to pick, I would pick. No, Casey, it's a great question. I mean, thanks. Anything like that. Any idea you have, you're welcome. It's great to share it. I don't want to say you're welcome to share it because that sounds like I'm blowing you off. But I'm talking about, I see exactly what you're talking about. But if I had to do it, I'd be doing the Netflix, not the Tesla, because of the lack of overhead resistance. That's all. So now you got things like Broadcom, but Broadcom, or let's say NVIDIA, because everybody trades NVIDIA. The problem is the more that they futz around. So let's take Tesla again. So I see what you're talking about, but as you see, it failed at that resistance. 15-minute chart. A lot of times when I play a 2-minute, I look at the 15-minute to see if it's at support and if it's in a big old downtrend. So if I see, let's say, Tesla on a 15-minute really overbought, but I see a 2-minute playing an inverse head and shoulders, then I go to the next stock. I don't trust it. So that's when overbought, oversold means a lot. So let's go into Netflix. Does this tell you anything? Yeah, it tells you it's oversold and it had an inverse head and shoulders. So I'm definitely looking at multiple time frames and definitely looking at the pattern. But look what happened on a 1 minute. Thank goodness I showed you the right one. So Netflix is held up and Tesla sold off 2 points. So it's just, I'm telling you, when a 15-minute chart looks bad and it rallies to resistance, I just can't trade it. So this rallied to somewhat resistance. But just this one, that's how I look at it. So just keep that in mind. So do I look at expected moves? Not really, and I'll show you why. The expected move from me was January 2nd levels. So number two, the expected move widened when this bull flag broke. So this was also posted on StockTwits. So when this broke, the expected move widened. So I don't really look at the expected move. I look at support and resistance. I just can't stress enough that I look at support and resistance, and I also look at correlated indexes. So if I see the NDX on a daily chart and I see it hitting support, but it's at January 2nd levels, then my expected move on the left is to January 2nd levels, which is what it did. So weekly, I don't know, because the volatility has been real low, but everybody gets that wrong also, because the VIX can stay low for a long time. Like I said, this was posted before it happened. Pretty cool. All right, let me show you. There. Check that out. You see. And my pointer is messing up. So as you see, everything's slow. There. Look at the date. July 14th. There you go. It's forming the first bullish triangle in a while. So, and you know where it is now. It's up here. So definitely then the expected move widened. So I don't really go on that kind of move, just so you know. And like I said, it's all about support and resistance and correlated indexes. I mean, now I'll give you another correlated index. So we're going to watch the ES. You know I showed you all those lines, but then I would watch the bond market. So here's another interesting factoid. Number one, I've been calling the top in the bond market, not the top, but the monthly break of the trend line since I started in the business. This actually goes back to 1982. It's broken the trend line. What's that mean to me? It means every rally has to be sold. So that could be an inverse head and shoulders, no doubt. But just keep in mind that in the long run, So in the long run, I think it goes all the way to here, all the way to where it was in 2000, another 20 points. Short term, the reason I'm bringing it up is that better hold. Yeah, that could be an inverse head and shoulders. It could be. But if that doesn't hold and it goes to here, that's only another 2 or 3 points. Then there aren't a lot of reasons that the ES should go higher. I think the bond market rallying, and it is a big difference. And rates are not going down. Just keep that in mind. So, there's a lot of treasury issuance. And also, that's the 30-year. Just keep in mind that with all the treasury in issuance, and keep in mind if the Fed lowers short-term rates, it's bad for the long-term bond. So, the treasury yield curve was like that. It should be like this. So just, keep that in mind that this is the 30-year, which stinks if you wanted to refinance your mortgage. But I'm basically going on that if this sells off, so we could put up TNX. That's the bond yield, note yield. Same thing right here. Yep, one of the longest yield curve inversions. And Earl, what's that normally mean? So usually what it means is you get a recession because they're raising short-term rates to cool off the economy. So, but, that hasn't worked for 2 years. I mean, maybe it's a big old lag. All I know is if they lower short-term rates, it could make inflation really go up. So, that's how I look at it. You don't have to believe any of this in here. I'm just using that the 30-year bond, if it breaks up, I mean, the yield break up or this breakdown, yeah, that's not going to help the ES in the long run. That, it needs to reclaim that. I think 30-year yield is pretty important. The next stop, if that doesn't hold, yeah, you have all this little intermediate support right in this zone. If that doesn't hold, you're talking about there. That's why the arrow's there, right in that zone. That's about 117. So if that doesn't hold, and it goes to here, I got to think the ES goes to here, all the way down to 5,500, another 74 futures points. So that's what I'm looking at. So no idea in Amazon. Like I said, I'm not trying to overanalyze if something's done or not. I will think this selling's done when it forms an inverse head and shoulders at support. Good news, it's finally at support. Good news also, it had that panic candle. So now I'm not trying to be glib on you. So I'm not trying to be a Weisenheimer. But I couldn't buy here. It looked ugly. No doubt it looked ugly. But up here, then I think the selling's done. So I'm not trying to be a Weisenheimer. I'm just saying then to me, it's definitely showing that the trend has changed. Up in that area, 185. At least then, if you buy, you're buying on the way up. The big problem is that gigantic coagulation of resistance. So now you got the 183 is trying to form an inverse head and shoulders, but yeah, the 185 is big resistance. So I don't think this is a stock I'd trade. That looks like your upside objective. So I just think they're better ones to trade. Thank goodness we haven't touched the ES. Like I said, the ES could go even lower. I didn't touch the NASDAQ. That could go even lower. So I'm not touching anything in here at the moment. And you're right about the ES. I'm telling you, I just can't go near the ES when, number one, and so just to let you know, I'm going to have a performance problem. So what I mean by that is that I have up too much instances of think or swim. So it's going to blow up on me. There, I just ended one of them. So the whole idea in here is if the NASDAQ stays down this much, and stays in this zone, then the ES doesn't have a lot of reasons to rally. That could have been inverse head and shoulders, but it's against a lot of resistance. That's the problem when you have these consolidation patterns. At least that's what I see. So that's what I see. So that's what I'm going to be doing today is, number one, with all the geopolitical risk and the NASDAQ refuses to go higher, I have to look to sell rallies. So even if Goldman Sachs look good, if I see the NASDAQ doing this right here, I cannot in good conscience go and chase Goldman Sachs at resistance. So, I mean, that's how I'm going to be playing today, which means I'll look to short rallies And I can't look at the moment at buying anything. Now, keep in mind about commodities and metals and the dollar. I have not seen the correlation for a long time. In fact, I don't even have the DXY up here. Just like the moving averages, just like oscillators. A lot of people are better at interpreting that stuff than me. So I just don't use it. I mean, I just don't use it. Other people, like I said, are better at it. When the market's going down, it doesn't work anymore about gold going up. And it also doesn't mean bonds go up. It just hasn't worked like that for a long time. So now, if we're going down because of war somewhere, yeah, you'll see gold go up. But if you're going down because of political risk, everything can go down. Hedge funds can dump everything. So, I mean, that's the way I look at it. And like I said, this is going to be one of those sell on rumor, buy on news. In my opinion, you don't have to believe that you basically do this on an hourly chart. There's your inverse head and shoulders. You see it a mile away. Well, I think you do. I always say that to my wife. You could see that pattern a mile away, and she's like, no, I can't. So it better be a perfect one or I don't mention it. There's your resistance. Now, Biden leaves, what's going to happen? You're probably going to get this bloop like you saw on Amazon. You're probably going to get that move all the way to here, to that massive support. And then you look for an inverse head and shoulders, which means I'm going to miss the beginning of the move. But you'll probably see that bloop like 50 to 100 points on the S&P. So, I mean, probably a sell on rumor, buy on news kind of idea. So that's what I'm going to be watching. So at the moment, chart patterns mastery, if I post an exit in Apple Fly. So just to let you know, we do a lot of stuff with expiration. So I'll show you what we're talking about. So we sold a straddle in Apple. So we sold the 225 straddle today at $2.27, bought it back at $1.82. We also did this. So we did this. We bought a butterfly in Apple. I got to actually post the exit. So this 7 points is gigantic for next week. So we actually did this. We're out. I got to post the exit. So we bought it at 247 and we had just sold it at 265. So made like not much. So we made like 6%. Now you might be like, why the heck did you get out? So I did this one. We did this one. There. Got out at 265. Why'd I get out? Because I'm nervous about that bear flag. I'm nervous about that. Just like I was nervous up here about that bear flag. So if I see it go to major support, like in this zone, yeah, darn right, I'm more interested in doing something neutral. So I just took an exit. So just to let you know. So thanks for being with me. Thanks so much. And thanks so much for the great questions. And take care, and I'll talk to you later.